Alright, welcome back. It's Happy New Month for you guys. A blessed March to all of you. We appreciate God for all that was in the month of Feb. It was a great month, actually, the greatest month I've ever had in my trading. So, yeah, that is basically it. But we happen to have we passed our challenges in Jan. We got funded. We got a payout. Our first payout was in the first week of Feb. We managed to squeeze out our second payout also in Feb. So we are still in the first. Actually, we are currently in the second quarter of our trading challenge of the 100 days, but so far the progress is more than pleasing. I expected to at least get a payout prior to day 30, but we happened to squeeze out too, and all thanks to the grace of God. Yeah, don't mind the slip of the tongue. I'm just happy today was a good day. It was a Monday. We had a very large opening gap. The market stayed heavy on the sell side. Then market open, we were heavy on the buy side and happened to participate in the buys. So there is something I explained to you guys, and most of you are not grasping the concept here, leave alone the one who taught it itself. But I told you that NQ is in a six sister. So if you can look at most of you hoping to sell NQ, I don't know, I also have possibilities of it, but I don't want these laws to be taken out. Most especially Friday 6th Feb, that law has to stay in play if the six sister is going to work out. We had all-time highs at 30th October, where ES and Dow happened to rally above that, as you can see. Just there on 30th October. The Dow and ES managed to rally above that, and the NQ failed. They went back above it multiple times, but NQ still failed. So we had an accumulation, we had a range bound market. For NQ to enter a buy model or a buy program, NQ had to first retest to deep discounts. Mark that, NQ had to retest to deep discounts. And if I am to come on here and measure this move, you can see that we happen to drop further into close to the low of the range. But NQ held the low. Most of you are waiting for a manipulation to give the year a bottom week and then a flip back up, but I don't think that is meant to happen. We have our reference levels. We have this need opening gap here. I'm going to toggle this on. We have this need opening gap that was on the 22nd of Jan, corresponds with an order block on the weekly. So the low of that is the weekly order block, the low of this need opening gap. So have that in mind. Market engineered liquidity below it and then happened to come and take it out. So most of you thought that after this market is going to drop, but I don't expect that. And a move back above this need opening gap stimulates NQ going to all-time highs. So I don't know, I can't talk yet because it's still a Monday. I can't judge the weekly profile off of a Monday. Basically, we have to wait and see how the week closes. But most likely, if we're in a buy program now, it should be starting because we came into the optimal trade entry for the second time on NQ. So if I'm to show you, where is my expansions? If I am to show you, NQ came back on the 0.79. So I expect Monday's low to be left in play, because we have SMT with ES. Between ES came and took out Tuesday 17th Feb's low, but NQ failed, and also the Dow did the same. So NQ is lagging behind on all the three, but I expect it to have higher gain. So we have this week graded. We went to the 0.25, the lower quadrant of it. Market rallied off of that. Now I would want a closure back above this week so that I can use these gradings for tomorrow. So far the market has flipped bullish. We took out all the needle opening gap. Market has went away above it. So I expect the market to continue heavy on the buy side if we are really going to buy and go to all-time highs. A move below this previous monthly low, this is February's low, would nullify the idea of buys, and I'll switch to sells. But for the time being, let's go over the trade I took. So this was a trade I took on the 1 minute. As you all know, it was a simple scalp. We have half of the daily wick I told you about. We came into the 0.25, the lower quadrant, failed to reach the low of that week. We rallied back above. Look at how consequential approximate of that daily wick holds the market. I'm having my 12 AM to 12:30 opening range, other opening range, high and low, and it's also graded. So this is going to be going off anytime. But I want you to look at the gradings within this needle opening gap. So 9:30 opens up. What's your draw on liquidity? It's the 12 AM 12:30 opening range. The market gives you that, closes above consequent encroachment, drops into the lower quadrant of that, fails to touch the low, and then pushes higher. After that, the market does not come back for it any other time. So now this is how you're going to use it. We are going to enter off without no confirmation. Now this confirms the bias. We closed above 12 AM 12:30 opening range. If we are heavy on the buy side, the market shouldn't come back for it. If we are going to sell, the market comes and drops back and closes below it. But any single pullback you get, you are looking for an entry for longs. So yeah, after this big move, any pullback, need a confirmation and then rallying above. So I took two trades. One was a break even and the other was a winning trade. So I happened to risk more on the second trade because I was so sure about it. And on the first trade, I wasn't sure. I risked less, keeping myself in check. So I had this drop into this fair value gap, this bullish fair value gap right here, leaving all the fair value gaps below as breakaway gaps. So that fair value gap, the market dropped into this. This is not an inversion. This is not an inversion. After a large move like this, most of the times you want the market to drop aggressively and close below a fib level. So suppose you have this graded. You can see this is also another daily wick, the low of it. So if this market dropped and closed below this daily wick low, I would consider this an inversion and take it. The market failed and closed very near to it. Another thing that nullifies it as an entry is the fact that the market did not stay in the lower half of it. So if it came and on the retest stayed in the lower half of it, showed no intention, excuse me, I think it's running out of battery. Let me see. This is fine for my video. If it stayed in the lower half of it and closed bullish, then dropped, gave me this order block, I would take that as a sell. But it wasn't the case. The market wicked the lower quadrant of that wick on the daily, wicked again. So the moment I see these wicks, I'm so keen on the body closures then, because the moment the market gives you these wicks, it shows you that this area is being rejected, and the more the wicks, the more the possibility of the area being driven through. So the moment I get a body closure where I have been having rejections and I get a body closure, it is a confirmed entry for me, and I'll enter that, manage risk very, very tight. I'll be moving my stop loss, taking break evens very quick. I wouldn't wait for the trade to rally and rally. So this is what happened here. I expected this high to be taken out for us to come into the concentration of that week, if you can call it the main threshold, because weeks are blocks. I can't say concentration. This is the main threshold of that week. The market rallied and stops went to break even. Came back and tapped the fair value gap going into the 10 a.m. So this is the macro, opened up, dropped lower, dropped and gave you an order, a breaker, sorry. So that is a bullish breaker right there. So this is actually a unicorn model that I took. You have a breaker right there. You have a fair value gap above it. So I would have exited on the breaker, but I wanted to see after this strong candle rallying upwards without a bottom wick, I wanted to see whether the market has an intent to drive it back into the fair value gap. But we dropped and rejected, so at the rejection I entered buys for a move higher. I told you I risked more, so my target for the day was quick. I was targeting around $2,000, happened to make 2,100, but it's cool, it's fine. Still toiling with the consistency rule for our third payout, and we scaled up. We're now having 2 accounts, so next payout might be huge, a huge one, might be a nice one. So yeah, that is it. For those that are saying transparency issues, you might have not taken the trade, that is your proof for you. Took the first trade there, got stopped out at break even. Second trade got taken out at full take profit. Yeah, so that was it. So this is what I was telling you. I was targeting somewhere around here. The market happened to give me a few $100 more. So yeah, bullish breaker, market rallied. Actually SL was below that. Yeah, so bullish breaker, the market rallied, tapped to the fair value gap, stayed within it. The body stayed within the upper half of the fair value gap and then happened to rally about from that. So that is it. Thank you guys, tune in for today. So this is what I was telling you. It was 1 contract for the first trade and then 2 contracts for the second trade. That is it. Until then guys, keep up, don't lose track. Still have a long way to go. It's 100 days. So far just moved, I think, somewhere around 25. Okay, thank you.